The dollar's strength continues. It seems like it's a path of least resistance for the currency. If we look at one which is under serious pressure in our neck of the woods, of course, the yuan. Is there a line in the sand? I think we're trading at, what, to 6.90 at the moment or thereabouts. Is there a line in the sand for 7, given the PBOC's aggressive fixings of late?
I would say there is definitely no hard line in the sand. I think just on what you mentioned, that there has been some deliberate fixing which is lower than what market has predicted. This is something that we have seen as well in the past. If you look back in June 2019, where that was in the middle of a US-China trade war, whenever it gets to very key levels like 6.9, 7.0, there is always this effort to slow down the uptrend in the dollar CNY. And I would say that this is just about slowing it down rather than drawing a hard line in the sand, because what happened subsequently to June 2019 is that it still went on above 7 in the subsequent months as well.
Yeah, so, Teck, I mean, what does it tell us then also about the fundamentals of the Chinese economy?
Yeah, I think the currency is definitely a reflection of the troubles of the economy. And like what have been mentioned by our previous guest, there is many headwinds in the form of whether it is the ongoing property market confidence issue, zero COVID policy, and on top of that, the exogenous factor of a stronger dollar. China really needs to get a handle of the domestic growth situation. It might actually start to improve a little bit into 2023, given the very remarkable efforts that they have been easing on the fiscal side and the monetary side. But in the short term, into year end, it is still going to be some more pain.
Teck, in the end, it is about the strong dollar. What could dislodge its extreme, strength in the currency?
Yeah, I think as you just heard from Thomas Barkin, Fed officials definitely wouldn't give you the reason to be selling the dollar, because all of them need to sound extremely hawkish because they have been way behind the curve. Now they are forced to sound as hawkish as possible to regain credibility. What really matters is that as they already go further into restrictive policy settings, they really need a few more months of inflation moderation. And I think it is not unrealistic for that to happen. But even if on the 13th of September we get a lower print, they might ask for more. So I think only towards year end, if you get a good number of 3 to 4 monthly lower inflation prints, the Fed might actually start to soften up and the dollar might start to power back on its strength.
What's fair value for the dollar, given the expected weakness, given where rates are headed? I mean, how much downside should we be expecting when it is ready to come down?
Yeah, so we think that the weakest link that would suffer the brunt of dollar strength would primarily be the euro, the pound, and the Chinese yuan. So on that measure, for example, we are targeting the euro dollar at 96 cents by year end. Currently, it's trading just above parity, so easily 4% more on the euro downside to go. On the sterling pound, we are aiming at 112, which is also about 3 to 4% downside. And on the Chinese yuan, we are aiming for 7, so that is about 1.5%. So these are the major currencies that we are aiming for, that you should see the greatest dollar strength in these currency pairs.
So what you're suggesting here, Teck, is that the dollar strength that's been played out against the yen is perhaps over with, or what's the deal here? Are we going to see 140 anytime soon?
Sure, I think it is very tempting for the market to push it to 140, but I can also expect a lot of profit-taking interest when it gets close to the level, because if you look at the price action 2 months ago when it got to 139, and it subsequently fell very sharply to 130 level. So I think just the scale of such a move would get people a little bit nervous to play too much upside. If the dollar strengthens against the euro and the Chinese yuan, I think the gravity is still pointing upwards towards another try at 139, 140. But I think 140 is it will be toppish in our view, because like I said, euro and Chinese yuan weakness is probably the main focus. dollar strength against something like the Japanese yen, which is already very heavily beaten down, it should be a bit more limited.